Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. Very boring day out there, and I actually didn't take a trade today. Nothing stood out to me glaring in the morning. I saw the low volume, the range on the S&P 500, or I should say the range on SPY, was $1.14. It was the lowest volume day that we've seen in weeks, so I'm happy with that decision. We were on the verge of breaking resistance, but we couldn't quite do it. We had resistance of 293.08. We got up just under that level. The burden of proof short term is now on the bears. The bears are trying to defend these lower highs from breaking, and they're on the verge of breaking bullish. If we can get over 293.08 and 294.15, the next level that we're really looking at for major level is the all-time high, and that's going to be less than 3% away. So it'll be notable if the bulls can clear the highest price that we've seen in weeks. Notice how there's a lack of significant fear. It's all based on price action. Fear is magnified when we're at the lows. Fear dissipates as soon as we bounce. They're talking about the yield curve again on CNBC, but it's much different than when we were looking at yield curves and the price was weak. So looking at IWM, same scenario. Daily time frame, clear lower highs. Anything under 150.89 was just a lower high, unable to break it. Even if we drop down and break the low of yesterday on these individual names, I'm still looking back down at our base of support. So even if SPY drops down and breaks 289.95, it's still sticking within the tightening range as far as I'm concerned. So QQQ did get a bull break. So slight difference there. We've been noting for quite some time now how the tech sector is clearly the strongest and it's helping the bulls out the most in the market. The top of the move that we have seen is 189.68. We got up to 189.23. So 45 cents shy of breaking that resistance level. And the bulls will have to break that resistance level to then be looking up at the all-time high. But the all-time high here would be a bit further away than it is on the S&P 500, just over 3%. Not a notable difference. XLF, still weakest, not close to breaking its daily lower highs at this point. Daily inside bar today, the bulls would have to turn around and break 27.03 to change the daily trend. And the S&P 500 bulls are not going to get very far unless the financial sector changes the daily trend. So even if QQQ breaks bullish, and even if we get some follow through there, if XLF does not change the daily trend, all-time highs are out of the picture. And as I've talked about in recent videos for the S&P 500, there is a possible scenario where on the weekly time frame, we could be forming a head and shoulders pattern. So even if we break that daily range bullish, if we can't break all-time highs and then roll over, we lose the weekly uptrend for the first time in a long time. In my opinion, if that scenario were to take place, it would be the tech sector leading the bulls to break their daily resistance. The financial sector doesn't join. The financial sector continues weak and drops to lower lows, and then the tech sector pulls back, and then the S&P 500 rolls over. So I am watching the financial sector because I have to see the financial sector break bullish if I'm going to believe that the S&P 500 has all-time highs in its sight. And a mini example of this exact thing, I watched QQQ and XLF all day, and today we had a 5-minute head and shoulders pattern on SPY to be watching. And it was from this morning. And we had the low of the day, the high of the day, double bottom at the low of the day, and there's our right shoulder. And we broke the head and shoulders bearish and got no follow through. So if I'm watching only SPY, I may get ficked out there. A double bottom, a 5-minute downtrend confirmed, breaking the double bottom, and I enter bearish, and next thing you know, I'm either stopped out or in the red. So man, that was a brutal fake out. Not if you were watching QQQ and XLF, because as SPY dropped to a lower low here, neither of those sectors broke the low of the day. If those sectors are not going to break the low of the day, the S&P 500 bears are not going anywhere. And I can't tell you how many times that little detail has saved me from getting faked out one way or the other. Healthcare, daily inside bar, still clear lower highs, 91.65 resistance. Bulls have to get over 91.65. And again, it's not enough for the bulls to just break one resistance level. They need to break to the highest price that we've seen on this bounce to be convincing. Biotech sector was a bit of a top fish today, unable to break 83.74 resistance. We topped out by 15 cents and pulled back. Still watching the daily lower highs on everybody. The only name that's broken it so far, QQQ. The VIX dropped down pretty significantly today, just comparatively. Obviously, we are not inversely trading. The VIX is not inverse to the S&P 500, but if it were, this would be like the S&P 500 breaking the high of the bounce 294.15. Obviously, that hasn't happened yet, but VIX is dropping to lower lows. So this is what I'm talking about with fear evaporating over the last week. And we're now looking down at really the range where we came from. 1470 was a bit of a double top of resistance. So heading back down into the 15 range, weekly time frame, significantly cooling off. And again, these spikes on the VIX don't usually last more than just a few weeks. And that's the case, a 2-week spike and then giving a lot of it back. So gold and silver are still in our 12-hour equilibriums. Gold, most important support is 1492. Resistance is 1509. Whichever one of those directions break first will be notable. I'm not trading the miners until one of these levels breaks. If the 12-hour breaks bearish, we zoom out to the daily, and the daily will start losing some momentum, and we'll be looking at the potential of weekly consolidation on gold. If the 12-hour breaks bullish, then we look to the highest price we've seen, up at 1535. Silver has a bit more space to work with for the bulls. 12-hour equilibrium. Support is down at 1683. And at this point, we have a double top of resistance, 1717 and 1718. And actually, I technically wouldn't call this our lower high being set yet. Anything under 1737 is a lower high, and we haven't topped out and pulled back enough to be confident that our lower high has been set. So close eye on these precious metals for the rest of the week, and if they don't break by Friday, certainly going to break either Sunday night or Monday. So miners today, NUGT, just a daily inside bar, couldn't break the high of yesterday, holding on tight. If the daily inside bar breaks bearish, we're headed back down to our low. If it breaks bullish, the bounce continues, but not expecting much activity in the miners unless we see a clear break in the precious metals. Oil rejected from resistance after the inventory report, 57.43 resistance. We topped out at 57.11. So at this point, if we're looking shorter term, which I'm not, I'm looking at the weekly, but if we were looking at the daily, this is our range. The bulls now have to hold 53.75 to remain in this tightening range. And we're patiently waiting for a break of the tight range on the daily, and then we'll zoom out and wait for the tight range to break on the weekly. And natural gas pulling back today, so we have a tightening range here as well. If we're looking at it on the 4-hour time frame, we have the high at 227, the low of 213, our lower high, and the bulls are trying to hold a higher low compared to 213.8 to stay in this tightening range. Otherwise, if we break 213.8, the bears are back in complete control on lots of time frames. So that's where we stand overall. Battle of the bulls trying to break resistance. The S&P 500 is up a little bit here after hours. On the futures contract here, the mini futures, hourly time frame, trying to confirm breaking the high of the day. And we're testing those levels now. So we'll see where we open tomorrow. Bulls need that little push through to break those daily lower highs and be looking back up at the all-time high in the S&P 500. Hope you had a good day. Do good things out there. We'll end it off with a bit more Iceland. I've got a whole bunch of footage to be going through from more meetup stuff. But Iceland's a good meantime something. See ya.